Welcome to the Ideal Investor Show. Join us on the journey to financial success. Let's go. Today I want to address something that happens every so often, and I find it totally understandable. And that is, you see that I'm publishing podcast episodes, I'm being interviewed, I'm giving presentations at conferences, writing articles, writing posts on Substack and newsletters and all this kind of stuff. Always about how can you use residential real estate to build a portfolio of assets that generate positive cash flow and ultimately allow you to reach the time freedom point. And the question that I'm being asked over and over, not constantly, but every so often, is, well, you started this in 2008 and 9 and 10, and then you really turned it into a business at the end of 2015. So that's all been going on quite a while. And now we live in 2024, we have higher interest rates and all that good stuff. So is it really still possible? And so I found somebody sent me an article on CNBC, and that actually was titled "The Real Estate Game Plan to Financial Freedom Before 40." And what this example showed, and I'm first of all want to say right away, I find this to be a little bit extreme, and it is maybe possible in certain locations and under certain circumstances. But I want to right at the beginning say this is not the norm, but I still think it is worth entertaining and worth talking about it. So here's the person this article is about. His name is Shu Matsuo Post. And in the time frame between 2017 and 2024, so this year, what he was able to do with his spouse is to buy 6 properties, generate positive income from all 6 properties, and is basically now in a position to live off these properties. Now, how did he do that? How was this possible? So he and his spouse, his now wife, both work in the high-tech industry, and both had really good jobs. And they married in 2016, and then in 2017, they looked at what do we really want to do financially and how long do we actually want to work. And they were in their 30s at the time. And so the jobs that they had were really well paying, like more than $200,000 a year jobs. And they realized when we put our financial wherewithal, our accounts, our income and stuff together, we don't really need that much money for the two of us, even if we want to start a family and so forth. So what they decided is to say, okay, let's take one job. And they decided to go for his wife's job and the income that comes from that for everyday life, for paying for the car, for paying for rent, for paying for food and insurance and all those kinds of things, so that he could basically put his income aside and save. And so in 2018, within 1 year, he had put pretty much all of the income of the first year aside, almost $250,000, and bought the first income property, which was a duplex. And with that kind of money, which is different to our approach, is that he could buy this property outright and didn't even have to worry about a mortgage or interest rates and stuff like that. Obviously, whether he bought this property, and I believe based on the price that he bought it somewhere in the Midwest, because the high-tech jobs they had in the Bay Area in California, you don't find properties, a duplex for $250,000. So they obviously bought it somewhere else where you could find a better ratio of rent income to the purchase price. So that was the first one. And then they kept going over the years and basically bought the 6 properties within the 7 years time frame between 2017 and 2024. And when you think about it, when you have 6 properties, single family and duplexes, and you have 0 mortgages, then it is not that unusual to assume that they have anywhere between $8,000 to $10,000 in income. Now, yes, there is insurance that needs to be on there. There is property taxes to be paid. They also need to have and should have a reserve, which they do. And So that it's not 100%. And then because the properties are most likely quite a ways away from where they live, they will most likely also have professional property management for their properties. But I would say it's not really that unusual to assume that they get 75% out of that income. So if they were to get like $8,000 in gross income out of the rent of these properties, then they would have between $5,000 and $6,000 net per month. Now, what happened is that Shao Matsuo lost his job because the company he was working for had developed some sort of software that got sold, and the company closed, and he was basically out of a job. And that brought up the point for the article in CNBC to say, okay, are you going to find another job or what are you going to do? And they realized that they could basically afford to just live off the income of the properties. Now, so he didn't go after a new job, and his wife still has a job, but even if she would lose her job, then they would still be fine. And obviously, as we all know, if you're regularly listening to our show, you know that obviously the income that they're getting from rent is continuously going to go up. It will be inflation adjusted. So the purchasing power that they get out of the rent, because the properties are all paid for, is maintained. Now, if they're going to wait a little and maybe another 1 or 2 years and they can afford to buy 1 or 2 more, they can work their way to $10,000 gross income and probably $7,000 to $8,000 net income. And the other thing is, obviously, with that much income, they will have reached what I call the pivot point, where they have put enough money. Like in my case, I put $25,000 aside as a reserve, and you don't need to continue to add to that every month anymore when you reach that number. So this is an example that just shows that the principal strategy works. Now, when you say, okay, but I don't have a spouse who makes $200,000 in income and I make $220,000 in income or anything like that, we have much more regular incomes or average incomes, and so it wouldn't be possible for us to do anything like that. Then please keep in mind that they paid for these properties cash. But you can still do basically the same thing. You can still participate in the same strategy, like I'm willing and happy to help you in our mentoring program. The only difference is that instead of paying $220,000, $250,000 straight out for the property, you would only pay 20 or 25%. Now, obviously, you would not be able to have all that positive cash flow within 7 years. It would take longer, but you would achieve the same thing. And I think nobody would ever expect to get into work after college and then retire 7 years later, right? So like I said at the very beginning, this is a very extreme example, but the principle of the strategy is proved by this example on the extreme end. And if you go the more traditional route and you get a mortgage and you hold these properties for 15, 20, 25 years, or maybe even much longer. And what I mean by that is not necessarily the same exact address property, but maybe you start out with renovated properties and then you decide over the years to sell a renovated property and exchange it for a new build property and stuff like that. But to maintain a portfolio of 6, 8, 9, 10 properties like I do, and like in this case, this person does, that will get you to the point where you're at some point no longer dependent on a job. And that's how you actually get to the financial freedom before 40 in his case. And for most other people, it might be before 50. But it's still very desirable. And so I think it's a game plan that you should definitely consider. Now, I only really touched here on the very high level stuff. And if you want to discuss it a little more in detail, most people don't start at zero. Like in this example, this guy started at zero and started to put insane amounts of money aside. Not everybody can do this, but we can look at your personal situation and then determine what works for you to get to the same financial freedom, time freedom point that these guys did. It is definitely possible, and I would be really, really happy to help you. So if you want to consider this, go to idealinvestorshows.com and find the button to book a call, or go to the idealwealthgrower.com website and you can get in touch with us there and just, see that we can have a conversation and see how your situation might be adjusted and how you might actually receive some help to achieve the same goal. So with that being said, be well and stay safe, and I talk to you tomorrow.